Everybody, hope you're doing great. Today we're going to cover this week in QQQ for the week of July 26, 2021. Essentially, this is the NASDAQ 100. If you like this content, please like and subscribe. This week's going to be a huge week for the Qs with almost 50% of the total holdings announcing this week. So let's just jump into it. Let's cover the earnings scoreboard. So last week we covered Netflix and Intel specifically. Both of them did as expected. Netflix and Intel both did not have a great earnings. Intel missed sales numbers. Netflix missed, I think, everything. Certainly earnings, maybe they missed their subscriber count. They've gotten a lot of flack for getting into gaming, which is probably well-deserved. But we're up to 19 correct, 0 incorrect for terms of performance. Intel and Netflix both down last week based upon the earnings announcement. So prediction-wise, PrepToGo is doing pretty good. There's a lot to cover this week. And so let's get into also the end of last week, what happened last week. So we predicted a small bear. We've seen a lot of non-FANG plus companies go down over the last couple of weeks, but the FANGs are lifting up the Qs as a whole. And the week started off bad. The Qs were down, I think 2% on Monday, but bounced way back up in the week on 2.1%. So certainly we haven't seen the bear cycle that we certainly projected for the last 3 weeks. Really think the FANGs have been driving in the stock price up. They weren't performing as we were expecting they were to be, which is good. Qs are up 17% for the year. But the bear that we were projecting did occur. So our forecast is it's gone down a little bit week over week, 3% from last week to this week. We've seen a little bit of a drop in the beginning of Q3. It's a cyclical. It always happens. Q3 tends to be their worst growth quarter for all companies, and that trend continues. Analyst forecasts, surprisingly, are very flat week over week. Hasn't changed much at all. I think they're pretty satisfied with where they're at and their projections for the next 12 to 18 months. So, again, Qs are up next week. We predict a small bear, meaning it was going to go down at least half a percentage point. Did it at the beginning of the week and then bounced back to a full recovery at the end of the week. Some housekeeping. PrepToGo is going through a funding round. We are an AI big data fintech company that predicts how companies perform and how that performance translates into investments. So stock, ETFs, options, etc. We'd love for you to join us on the journey of disrupting the $1 trillion robo financial advisor market. So if you'd like to join us and become a part owner investor in PrepToGo, please see us at wefunder.com/PrepToGo. We're doing a crowdsourced funding for anybody that's interested. So let's talk about next week. We start to see a transition into a small bull, mainly driven off of the FANG growth and driven off of earnings season. We do see earnings season as red. We always have it as red just because simplest of statements can make a stock go in the opposite direction. And so as a general rule and policy, PrepToGo always has significant caution going into earnings. We don't recommend stocks or options that are for companies that are going into an earnings within 3 weeks or 2 days after their earnings, just because there's so much volatility and there's such a risk of going into earnings, more risky than options. We tend to avoid that. But generally, we see a small bull happening. Lot of should be strong earnings announcements this next week. So let's just quickly jump into what's our predicted bear versus bull. We predicted a bear early July. Didn't really pan out. We had 2 down days that were pretty significant, but never really had any pullback as projected. Does that mean that got pushed off? Could be. But again, we're seeing the shift into more bull and bear within the beginning of August. This week is a transition from what we predicted to a bear into a bull. Let's talk about earnings announcement. So last week, Intel and Netflix obviously performed as expected. This week, a whole lot of movement happening. 48% of the total QQQ holdings announcing this week. all the biggies: Amazon, Google, Microsoft, Apple, Tesla, so on and so forth, plus 18 more. There's just a lot happening this week. We're not going to cover all of them. We're going to cover as many as we can. And so let's just jump into our predicted pricing for these companies and when they're announcing, and just some details on them. So let's jump into that. For those that haven't seen it, this is Prep to Grow's portfolio. This essentially, we create a portfolio for individuals based upon their risk factors. We link it to their account. In this case, I'm linked to the Prep to Grow Test Ameritrade account, where we can buy and sell directly from Ameritrade from Prep to Grow. It's very simple. You just click on a button, hit buy call, and you're all said and done. And then sells are automatically placed after this order is executed. So we manage to buy and sell for you about when to get in and get out. And it's all algorithmically determined. So let's jump into the predictions for this week for the companies announcing. So there's a lot. So first we'll start with KLA. We're going to go through some of these pretty quickly and spend some time on Lam and AMD and KLA. But we'll cover through all of them. So KLA, they're a capital equipment company based in Milpitas, California. I've done some work for them very early on in my career. KLA, Lam, and Applied Materials, really they're the foundation of the high-tech market, especially from a chip manufacturing perspective. It's always been known within the Valley that if Lam or Applied Materials, Lam, we're going to cover detail, if they're going to have a bad quarter or had a bad quarter, that's a bad sign for the whole economy. Essentially, they are one of the primary leading indicators of what's going to happen in the market. So always watch them. If you hear bad signals about Lam or about Applied Materials, even KLA, that's bad signs. So KLA is announcing on the 29th. They're announcing their Q1. We've been tracking them since 2013. They've had a pretty good previous fiscal year, but they've been very flat through Q1. So expectations is that they're pretty much they're going to have a good earnings announcement, but stay essentially where they're at. We're predicting only a 2% price increase. We have a high degree of confidence in that because of our accuracy around that. So predicting a 5-day gain versus the 30-day gain. 95% accuracy for 5-day, 93% for 30-day, or 102 out of 107, or 102 out of 109. Good accuracy on them. This one we're showing here had the most volume to open interest ratio that we've seen. And this is for the January 21st, 2022 expiration date at the 320 strike price. And it's pretty cheap. Actually, not too cheap. It's at $3,000 for one contract. So pretty expensive. But the challenge is there very limited gain we're projecting with KLA. So it's pretty flat. So while we have accuracy on it, there's very little to gain here. So we actually didn't recommend this. And they're up pretty high. So they've done well technically from the technical perspective. 200-day at 287, up to current price now 320. But again, we don't recommend them. They've already hit what our predicted price target is and gone beyond that. So in the short term, not a buy, but should have a great quarter. Let's jump into Lam Research. So we're going to spend a little more time on them. We have a very good accuracy on the 5-day, 94.7%. This is a stock. Lam Research is a semiconductor capital equipment company. So they essentially build the equipment where the chip manufacturers build their chips on them. So if there's a high demand for chips, which really is a big signal for the industry, Lam will get a bunch of orders for their manufacturing equipment to produce those chips, and that is a leading indicator of how the economy is going to perform. We are recommending them as a stock, but it's red just because they're announcing on July 28th. We're expecting that their stock price is going to go up 9%, so from 640 to 695. So a good gain there, but again, going in earnings, we don't recommend buying into earnings. But they are projected to do extremely well. Their technicals over the last 200 days, they've had a good run on this. So roughly 20% gains since the past 200 days. Lam Research, they're based in, where are they based? They're based in Sunnyvale. Oh, excuse me, they're based in Fremont, California. We've been tracking since 2013. They are announcing their Q4 and fiscal year end. We have seen them dip right before their fiscal year began last year. At this time, obviously, it was the pullback, but they've steadily grown throughout the entire fiscal year and have essentially at an all-time high. They're growing 60% more than they were at the pullback, so they're going to have a good fiscal year. And we're expecting that they should crush their Q4 numbers. So expect good things from Lam Research. Again, all-time high. This is why we're expecting that the bull is going to start next week. Lam Research is a good indicator of the general health of the market and where it's going to go. And they're growing, and they look like they're going to crush it. And that's why we're getting more bullish on the rest of the calendar year for the Qs. Let's jump into AMD. AMD. So this is one. It's recommended. They're recommending on Monday. It looks like July 26th. We think short term, from an algorithm perspective, that they're going to be pretty flat to a little bit of a downturn. We're expecting their predicted stock price at 87. They're at 92 right now. So we expect that there's going to be a small pullback. I will say that AMD, who's announcing their Q2, is based in Sunnyvale, California, and they build chips, graphics, processors, and is kicking Intel's butt in the market. We've been tracking this since 2013. Short term, we expect a little bit of pullback, but they are at an all-time growth. They are, from a corporate growth perspective, almost 2x of what they were a year ago, 2020, and there's very high expectations. They very much fit our sweet spot of a low stock price with high growth. We think that them coming into the earnings, the algorithms are predicting that there's going to be a quick pullback for them, just because they've done a lot of acquisitions. They have typically always said something or done an acquisition during their earnings, which has caused the stock price to pull back. And so the algorithms are predicting some form of corporate event that's going to drop the stock price a bit. But long term, they are a long-term buy for sure. The algorithms call it a long-term buy as well. Again, all-time growth for AMD, made a lot of acquisitions, is beating up Intel pretty good, is competing a lot better against NVIDIA. They are a sweet spot for us long-term. And long-term is certainly a prep to grow recommendation. Again, they're announcing, looks like on Monday the 26th. Let's jump into Amgen. We'll cover them just real quickly. They announced, again, on July 26th. We have a very high success rate for them on calls or stocks. So this can be a call or a stock. Challenge here is they don't have a lot of growth rate on the stock side, but they have a good growth on the option side. And we'll cover which option this is. We're predicting that their stock price is get to 251. Amgen has had a rough couple quarters, but have gone up over the last 200 days. Not great, but is up, 3 to 4% over the last 200 days. The whole pharma biotech has pulled back a little bit since things have started opening up more and more. But long-term, Amgen is looking good. For this option, this is probably the most unusual option activity we saw for Amgen. They typically don't have a lot of unusual option activity. This is for the January 21st, 2022 expiration date for the 270 strike price. This one's a little more reasonable with the 575 per contract. But again, only a 21% upside on this. And going into earnings seasons, be cautious. But we expect Amgen to have a good quarter, announcing on July 26th. And finally, hopefully this is a good quarter after a while, since they haven't had very productive quarterly earnings announcements. Let's talk about Xilinx. Xilinx is announcing on July 28th. Xilinx is announcing their Q1. We've been tracking them since Xilinx is is announced, yes, excuse me, they're announcing their Q4 in their fiscal year. Sorry, not Q1. They're announcing their fiscal year end in their Q4. They're announcing on July 28th. Their headquarters in San Jose, California, which is right down the street from my hometown. Don't know a lot of people that have worked for them. They're generally thought of more of a traditional semiconductor culture, which is very old schoolish, you would say. Not like a Facebook culture or Google culture where they give free lunches and, very modern HR policies or people policies, but more traditional. We believe that they're going to pull back a tad going into the quarter. This one had the most unusual option activity for the January 21st, 2022 strike price at the expiration date at the 125 strike price. This one's a little more pricey at a 915 contract for a put, but we're expecting to pull back. It's 86% for us, which is a little more risky when we're talking about options. Option-wise, we usually like a greater than 95% success rate, so use this option. But again, we're expecting that Xilinx does about 10% pullback in their stock price. And over the last 200 days, they've been a bit of just like Amgen, they have not really accelerated with the rest of the market. The Intel pricing, the Microsoft pricing, Facebook, all the traditional high techs, Xilinx has just not kept up, mainly because they're viewed as a very traditional Silicon Valley semiconductor type company. So again, Xilinx announcing on the 20th, expecting a bit of a pullback and not an overly great quarter. Apple, let's talk about Apple. They're announcing their Q3. We've been tracking them since 2013. I gotta be honest, our algorithms love to hate Apple. The algorithms hate Apple. They only ever recommend puts on Apple. They don't ever think Apple's gonna go up. But word of caution on that, they're announcing 28th. They're part of a lot of SPY IQs, and they're a big part of the FANG. If you don't know who Apple is, obviously Apple's big manufacturer of computers, laptops, iPads, et cetera, et cetera. They are at an all-time corporate growth high. They're crushing it. This algorithm is predicting a pullback just because their algorithms hate them. I gotta fully believe they just hate Apple. They must be a Windows fan, our algorithms. But they're at an all-time growth high. Risk here, I would never make a trade at 73% on an option to put, or I would never bet against Apple per se, except for short-term pulls back. But we make a lot of recommendations on them, the algorithms do, and they really hate Apple. I think our algorithms are probably wrong in this case, thus the low success rate. Personally, if we look at their profile just from a growth perspective, they're at an all-time growth high. So they're crushing their growth. So we should expect some good things from Apple in their quarterly announcement, but our algorithms again hate them. They're announcing the 28th, all-time growth high, tracking since 2013, based in, I believe, Sunnyvale, Santa Clara, California. Good company. I love Apple. Should expect a good quarter, even though our algorithms hate them. Let's jump into Tesla, everybody's favorite. We're highly accurate in predicting Tesla over a short-term gain. So we're 75 out of 75. We recommend a stock or a call on Tesla. We are 100% accurate within 5 days. 75 out of 7 times, our prediction had made a 15% return. We're using a word of caution on Tesla just because it looks like there's a smaller gain potential here, about a 2% gain, but they're going into a great quarter. They've been crushing their numbers. They announced on July 26th. We've been tracking them, I think, since 2016. I think they're part of every single ETF out there. They're based in Fremont, or were, and now, I believe, moved to Austin. Or someplace in Texas. Tesla, obviously, again, everybody's favorite. This is for a call for January 21st, 2022 at the 700 strike price. Stupidly expensive, $7,500 for a call for Tesla. We have a high accuracy on them, and we're expecting this option specifically to go up about 12%. Their 200-day is oddly not that great. So a very low percentage. At one point in time within this period, I think they were at $800. And they just kind of floated back down and up between the 650 range and really hovered near that. Oh yeah, it was almost $900. We do expect Tesla to crush quarter, all-time high growth rate. We haven't seen growth like this from Tesla ever, so we expect good things from Tesla in terms of their announcements. Again, they announced on the 28th. So who else is there? Qualcomm. We don't really have good accuracy in Qualcomm. They're announcing on the 27th. Qualcomm is a San Diego-based company. They do a lot of mobile chips. They do a lot of IP and licensing. Well thought of company, has always had a very good culture. This is the one that we've seen that had the most unusual option activity, but sold already on the 19th, sold same day, returned a good percentage on the same day, probably 25-30% return if I'm doing the quick math in my head. So a good return on that. We don't have a great accuracy on Qualcomm, but we are predicting that they're going to go down in price by about 4%. Qualcomm never does well during their earnings and hasn't been performing too well over the last year. A lot of issues with them around IP and the markets that they're in, and I think they lost some lawsuits as well. Typically, when you have a very IP licensing heavy company like Qualcomm, there's a lot of lawsuits that are involved in that, and if they lose one, it tends to really dramatically hurt their stock price. 200-day moving average, I mean, they've hovered around 139, so they have not accelerated like any other companies. Use caution for Qualcomm. We expect they're going to pull back. They've had good growth generally for the last 12 months, but not accelerating like the other companies we talked about. Not like AMD, not like Apple, not like Lam. So those are the ones that we're going to cover. We're going to cover Microsoft in just a sec. So let's just jump back and talk about closing out the week. So let's talk about Microsoft real quick. We haven't had a recommendation on Microsoft in a while, probably for the last 30 days. They're at a near all-time high. They're announcing their Q4 and fiscal year end. They're based in Seattle, Washington. We've been tracking since 2016. Generally, algorithms feel that this is going to be a $300 stock within the very near future. They are an all-time growth high, and they're pretty much just crushing it. So Microsoft should have a very good fiscal year in Q4. However, they're about 289, 290 right now, and our projections are for them to get 300. So there's not that much room for growth in the short term. Long term, though, Microsoft has obviously a very good future. All-time high growth rate in a lot of spaces, doing very well. So expect good things from Microsoft over the next 12 to 18 months. Where our price projections start to get into the 320 to 330 range. But our short-term algorithms are projecting a $300 stock price. So again, not a lot of room within the very short term. So that's the week in the Qs. A whole lot of movement in it. Again, 48% of the Qs are announcing this week. But as you can tell, almost every single one we covered we're at all-time high growth rates or expecting to have good quarters. 2 or 3 of them are announcing their fiscal year end. And the ones that are announcing their fiscal year end should produce good fiscal year ends. So it should be a good week for the bulls and the Qs. We appreciate your time. This has been a bit longer just because there's so many companies announcing. Again, if you like this content, please like or subscribe. Everything we talk about here comes from Prep to Grow's AI and Big Data platform. It's recommendations. We're not a financial advisory company. It is all recommendations based upon our AI and Big Data platform. We appreciate your time, and we hope you have a fantastic week and, more importantly, a great week of trading the Qs. Take care, and we'll talk to you next week. Bye-bye.